Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended mixed on region-specific developments. US equities came under pressure amid a surge in US bond yields and hawkish comments from a US Fed member after hotter than expected US inflation, which rose 2.4% in the month of September 2024 compared to a market estimate of 2.3%. Most major US equity indices, though, bounced back on Friday to post weekly gains. After strong 2 weeks of rally, Asian equities came under pressure amid a lack of follow-up stimulus measures to boost China's economy. The Hong Kong and Chinese market fell over 7% despite more resilient performance in other regional markets and a tech rally which saw Taiwan equities up 4% and Thailand and Korean equities up 1% over the past week. Back home, Indian equities declined for the second consecutive week. The Nifty index started on a weak note and traded sideways amid weak economic data reported during the week and continued foreign investor outflows. Broader markets outperformed the Nifty index this week, with both Nifty mid-cap and Nifty small-cap indices up 1.3%. Among sectors, pharma, autos and IT led the winners with gains of over 1% over the past week, while metals and FMCG lagged, falling over 2% over the past week. The domestic fixed income market had another volatile week after rising initially on escalating geopolitical tensions and higher crude oil prices. Indian government bond yields fell across the curve after the RBI surprised markets by shifting its monetary policy stance to neutral, supported further by strong demand as the RBI auctioned INR 290 billion worth of bonds at the weekly auction at lower than expected cutoff yields. The 10-year government bond yield fell 4 basis points to close at 6.79%, while the 3-year and 5-year government bond yield fell 1 basis points each respectively. The INR gold rose 0.8%. Brent crude oil rose 1% for the week to close at $79 per barrel, posting second weekly gain amid escalating geopolitical tensions in the Middle East as investors remained cautious amid anticipation of a possible retaliation from Israel against Iran. The INR fell 0.2% against the USD to close at 84.1 per dollar, driven by rising US bond yields, strengthening US dollar, higher crude oil prices, and continued foreign investor outflows from domestic equities. Now, coming to the macro updates for the week, the most important one was on the RBI's monetary policy meeting outcome. The RBI's MPC voted 5:1 to keep the policy repo rate unchanged at 6.5% at the October meeting, in line with market expectations, but changed the policy stance from withdrawal of accommodation to neutral unanimously. Only one newly appointed external monetary policy committee member, Dr. Nagesh Kumar, voted for a 25 basis points rate cut. Governor Das highlighted that headline CPI inflation is expected to ease by the fourth quarter of fiscal year 2025 on easing food inflation on the back of robust crop production. He noted, however, that adverse weather-related shocks and an escalation in the geopolitical conflicts are upside risks to the RBI's inflation forecast. On growth, the RBI remained upbeat and kept the GDP growth forecast for fiscal year 2025 unchanged at 7.2% year-on-year, despite the recent moderation in high-frequency indicators. The RBI kept its inflation forecast unchanged at 4.5% year-on-year, some upward adjustments to the second quarter fiscal year 2025 forecast. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.